Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 7th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice ES here still remains within a very narrow range that has developed over the last now 6 developing days here. You can see down here, even on a multi-week basis here, 9 days, this thing is trading very compressed. So right now, this market is still inside those narrow ranges. At some point here, we may see expansion out of those ranges. You can see the volatility has clearly dropped coming out of the Labor Day holiday here in the United States. And again, given the overall trending nature of this market and being at the counter trend edge of this channel here, again, any rejection here could lead to a quick pullback. Again, a 4-day pullback has been about what this market has been capable of here over the last several months. 1, 2, 3, 4 months. This would be the 5th month running here, where if we pull back into the zone, it could be another buying opportunity for a continuation toward 4,600. So right now, very narrow range. Again, look to fade the edges with an upward bias. If we do start to see selling pressure and have some sort of close below the bottom of the multi-day range, that could trigger again several days of weakness, followed by an opportunity to buy it cheaper for a continuation higher. Alright, let's take a look now at the NQ. The NQ has very similar structure here as well. Again, there's your narrow 5-day range right there that is developed at the previous month's high. Super narrow 5-day range. If we are to see expansion out of this range, again, on a 5-day range basis, the extension would be at least about 550 points, maybe even higher, as high as about 750 points. Again, given the overall trending nature of this market, any counter trend pullback could be ripe for a great buying opportunity and a continuation higher towards 16K and beyond. Right now, again, inside the narrow ranges, so look to fade the edges with an upward bias. Any major stop run day to the downside, again, could trigger several days of weakness, followed by, again, another buying opportunity. Alright, let's take a look now at crude oil. Here's crude oil. This one has seen quite a bit of strength here lately from those recent lows. The 62, very strong area of support. It was able to overcome the 65.02 key range low. That catapulted price into our target of 70.27. Now that we've reached that level, price has kind of been holding in this range that developed here between 67 and 70. Still have an upward bias right now, but one thing we're looking at is an upper trend line that is developed across these highs. So here, there's an upper trend line. You have the lower trend line that kind of comes across this way. And if this market is unable to find a way through 70 here, then we may be looking at another rotation back down within the channel. Back to 62, back to 60, or maybe even as low as the quarterly low, previous quarterly low at 58. So right now, watching to see how this begins. At the moment, previous month's midpoint holding as support. A failure to hold that zone would open up quite a bit more potential downside ahead to begin the month. Alright, let's take a look now at gold futures. One more thing regarding crude oil. At the moment, nothing is broken to the downside. It's still holding the zone, and we could clearly trade within this range a bit more before some sort of definitive move occurs. At the moment, 60-minute time frame showing a bullish tail developing, and that could lead to a reversal back towards 69 on an intraday basis at the very least. Alright, let's take a look now at gold futures. Gold has had some great market structure here lately. Again, the 1760 level, very important. The 1835 to 1840 level, very important. We basically got that right here, getting 1836.90. So gold reached our upper end of the target. That's a target that we had ever since this day right here. Whenever we had this major rejection, we mentioned a snapback to 1760 could be seen. And if price is able to get above 1760, that's an indication that we are going to travel back within this market structure, and that means a move to 1835 to 1840, and we got that move all the way and have now reached that level and have backed off. One thing I mentioned when we were down here is when we do hit that level, or should we hit that level, we may see a rejection that can take us all the way back down to 1760, and we may trade in here for a bit before it attempts a return back toward 1900. So right now, seeing a little bit of a strong rejection off these highs, a failure to hold. 1805, 1800 opens up that lower half of the range. All right, that is it for now. We'll see how this plays out heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.